Hello traders, this is the StradeDogs weekly video about the bigger picture in which I'm going to go through daily and weekly charts of S&P, Nasdaq and DAX, and at the end of the video I'll show you the data for the next week. So this is the chart that I have posted in the Asian session about an hour before etc. open on X. I will give the link to this post and to my X handle in the description of this video. So long story short, this is the thing that was going into the Friday open, a big down day on Thursday. This is S&P, this is futures zoomed out. Now the difference here between this candle here and this candle here is a big one, although it doesn't really look like that when you just compare those two candles. Let's go on a chart and show you what I mean. So this is the thing now, and in the post on X I wrote that sellers are in control between halfback of this Thursday candle, and look what market did here on Friday. High of the day was at the midpoint of this previous balance, but when you make a fib on this Thursday candle, you can see also that basically what the high of the day was just a small poke above that halfback, and then they went down. Now what's the difference between this one and this one? Let's observe those two candles here on futures as well. So this one, this was the news driven move, and in this case daily 50 was served as support and market bounced from the lower end of a channel, while this one started as a true gap up. You see this small candle here, that was Wednesday, and on Thursday open was here. So true gap up, meaning that the market is opening completely above the previous day, and yet the close was here. So this was a outside bearish reversal candle, a bearish candle. Now, not every red candle is necessarily bearish. As said before, this one was news driven and closed right at support. And we know that news driven moves tend to retrace, and eventually they retraced all of this move. While again, this candle started as a true gap up and closed all the way here. So this one much more bearish than this one. When you have those huge red candles, halfback of them is often going to be a good resistance, which it was on Friday. Now what can happen here? What are the scenarios for the S&P? And similar one obviously are going to be on Nasdaq. You see that this balance wasn't really broken. Market closed below. Then on Friday they made lower low, but closed back inside. So this is a marginal lower low. And our scenarios for the next week would include, bullish one would be regaining the midpoint of this previous balance and going above Friday high, and in case here of futures and this channel, that would mean also regaining daily 50 and going back inside the channel, and that would negate the potential downside. The potential downside here, you can observe this also as potential head and shoulders. You can see where daily 200 is, you can see where previous monthly lows are, and this would be September low, this would be August low. So is it realistic to expect a move down into daily 200 in case of downside follow-through? Now downside follow-through, first of all, that means going below Friday low, and not only going below Friday low, but for market to make a real breakdown, meaning break below Friday low, then sellers on the rips defending that breakdown point and slowly building their way down toward these targets. So is it something that can happen, measuring from the all-time high down toward the daily 200? That would be like a 10% move on the futures, and obviously similar would be on index as well. You see on index here there is almost 11%, but during time daily 200 will gravitate to the upside, so let's say around 10% move. Is it something that's realistic? If they break below this balance and below Friday low and hold there, then yes, it is a realistic thing to happen. So basically we do have two scenarios. One is downside and the second one is upside. They're negating each other, and it doesn't really need to start from Monday and to be clear, because daily chart and moves on daily chart take time. This down move took time, but it began as a push above the Bollinger Band, in which we had 3 days completely above Bollinger Band. Then we had 3 red days in which market was trying to go up on red days, and that's the thing that you as a buyer absolutely don't want to see. It is likely that after this there's going to be a pullback, because what this means is that the market was propelled higher in the overnight session, while in the RTH session market was sold. Then we got this. So both up and down moves doesn't really need to be in a straight line. And you can see also how this day on Thursday, the high of a day, was test of a midpoint of the Bollinger Band, which is also daily 20 on large time frames. Always take note of industry moving standard averages as daily 20, daily 50, and daily 200. So basically that's the thing on S&P. And if we observe Nasdaq, now I will place here Nasdaq index with Nasdaq futures. Same thing here, both on S&P and Nasdaq futures. Daily 50 was acting on Thursday as resistance. A back test of daily 50 and a down move. Now again is a question of downside follow through. Similar but not the same like on the S&P, Nasdaq made a lower low and barely closed back inside the former balance. However, both of these markets are short-term oversold. You see that like here, when they were poking above the upper end of the daily Bollinger Band, there was a move back inside the Bollinger, and you can see this on Nasdaq, and you can see back on S&P, you can see this on S&P. So basically that they are here scraping the lower end of a Bollinger Band, and in any given day you could get some move inside the Bollinger Band. But as long as the market is holding below daily 20, below daily 50, and below these upsloping channels, which both S&P and Nasdaq are having, more downside can come, and buyers need to regain daily 50, daily 20, and go back inside that channel, while sellers need to break the current lows, meaning the Friday low, which is obviously previous week low. Now I will compare US markets with the DAX as well. Let's go on the DAX now, and here is the DAX index daily chart, in which we can observe that this week we got a breakdown of this here range, which is actually a 6-month range, and on the way back the low end of a range together with the daily 200 served as resistance. What is interesting here and important to understand is that on the way down, market gapped down below March double top, which was extremely important level not only on daily but also the weekly charts, and then later retested it together with daily 200, because here in this part daily 200 was not tested in the regular trading hours. Remember, index equals regular trading hours, and tests, levels, and references from regular trading hours are always carrying more weight than the ones that are made in the overnight session. So how important this is? Well, let me show you. First test, second test now as resistance, third support, fourth, fifth, sixth, seventh, eighth, ninth. You could say for this also. Let's say 10 tests, out of which most of them were supports, but it was also a resistance. Here 10 fell, here 10, now as well. So this is an axis line, a very, very important level. And on the way down, our downside targets were previous lows. So for example, this was September low, this was June low which was tested, and this is the gap that is visible on a monthly chart, because this is the gap between April and May. This is May low, this candle here, this is April high. And it is also a doable thing, because down to there, since DAX is already below daily 200, down to there is like a 9%, less than 9%. And it is a doable thing, but to get there, similar like to US markets, sellers now need to defend March double top and daily 200. Take note of these gaps as well. On the way down, market made a few of those, and this one and this one were bigger at start. They got tested. This one is a fresh one between Thursday and Friday. On Friday it was a true gap down open, and on the way up market filled majority of that gap, left a part behind. So for the next week, what are we looking on DAX? We are looking same like on S&P and Nasdaq, weekly low, which is again Friday low. On the upside, we are watching this gap and this area here. On the downside, below a weekly low or Friday low, we are watching the large time frame target, which is this gap here, gap between April and May. Let's go higher now on weekly chart. Let's stick with the DAX. This is DAX weekly. This is DAX weekly, also index and futures. This was one of the most boring weekly charts in this period, in this year, since we got 6-month balance without upside follow through and without downside follow through. However, now we do have a decisive close below March double top and tagging the June low. You see that this candle closed above the June low, so it is questionable. Can we get 100% range expansion of this range here? And obviously same like on the S&P, downside scenario below the lows, upside scenario on regaining March double top and daily 200. This would be the bigger picture, and the fib from April low down to 48.2, which is around 100% range expansion, we can say like that, although it is like 150 points of a difference, but 150 points on a daily chart is a move. You can see on a weekly chart it isn't really much. So how about moving down to 48.2? That would be around 9%. Okay, so let's compare now DAX weekly with US markets weekly charts by placing here S&P index for start. And now what can we see here? This was that thing from the daily chart, and you see that market didn't really made a decisive breakdown below that. This is Nasdaq. This is Dow Jones, which made new all-time high in previous week, and look what the previous week was. This was one of the topics in the previous weekly video, that a doji like this is much more meaningful when it is on a weekly chart. Not on a daily, not on some smaller time frames, but on a weekly chart. When you have a doji like this on a weekly chart, which was just a marginal higher high above the previous all-time high, that means something. And after that we got some downside follow through on Dow Jones. Okay, let's back to those bigger markets, and to wrap up the chart part of this, we know what to watch. We are watching those weekly lows, and we know what are the downside or upside scenarios, what are the requirements for that. Now let's think about is there any potential catalyst for the next week. And when we go to the economic calendar, and I'm choosing this one from the Forex Factory, on Monday nothing much. German info business climate, Lagarde is speaking in Bratislava, nobody cares about that all that much. Nothing that can move the market on Monday. On Tuesday there is a core PPI and retail sales, which are important data, and this can make some moves. So this is Tuesday. Then on Wednesday there is a lot of things here labeled as tentative. This is due to the US government shutdown, which is over a few days ago, but a bunch of data was rescheduled, and it is now questionable when is this going to be actually released, and is it going to be released at all on Wednesday, out of which important stuff are unemployment claims and the PCI index. Moving on to Thursday, and on Thursday there is Thanksgiving, which gives this week a holiday vibe, a holiday note. And we know from experience that the US markets tend to go higher into the holidays, which is another layer of analysis here. So holiday on Thursday, and then on Friday there is German preliminary CPI, which is again nothing much, but also a thing that on Friday, US markets are going to have shortened sessions. So the question is, who is actually going to trade on Friday? And if you are trading US markets, or if you are living in America, are you really going to trade on Friday? Most Americans will pack their things on Wednesday afternoon and go to their families and to spend Thanksgiving together, having a 4-day weekend. Thursday, Friday, right? Saturday and Sunday, which means Friday low liquidity day, which again means focus your attention on Monday, Tuesday, and Wednesday, and seasonally expect attempts to push markets higher in a holiday spirit. If those attempts are not present, or if they fail, like some up move like this, which failed, because remember, this was the true gap up, which completely failed. So if you see those failures, then break below previous week lows has more odds to happen. If they see them holding above this, then it is postponing the both bullish and bearish scenario, postponing, because holding and doing something bullish in those 3 days in which there is going to actually be trading is something that's going to be questioned next week. So the week after Thanksgiving need to accept or reject those pre-Thanksgiving moves. So that would be it in this lengthy edition of Bigger Picture video. And as always, I wish you a good trading and nice weekend.